In this video, we're going to take a look at the top 10 best performing stocks of 2023 so far. And we're going to see if there's any consistencies between them, any themes, or any other interesting pieces of information that we can pull from it. So to find out what are the top 10 best performing stocks of the year so far, I'm going to use TD's Stock Screener tool. And on this tool, you can add different criteria to search for, and then you can filter through all of the different stocks that are on exchange in North America in order to find whatever you're looking for. So what I'm going to do is simply add a stock screener for price performance year to date, and I'm going to include all of the stocks. There's 14,774 matches, and it's going to be ranked according to the top. So we can see the number one best performing stock so far of the year in either Canada or the US is Aston Bay Holdings Ltd. And that is up 1,112% so far. So let's take a look at some of these companies. Aston Bay Holdings, for example, is a mining company. It says it's an exploration stage mining company that's engaged in the exploration and development of gold and base metal deposits in Virginia, US, and Nunavut, Canada. Now this stock, the number one best performing investment in North America so far this year, is a penny stock. It trades on the TSX Venture Exchange for 24 cents Canadian per share. The company has a tiny market cap of less than 50 million Canadian dollars. And if you look at the 5-year price chart, you can see that it's been pretty much hovering between 5 cents and 10 cents, 5 to 15 cents, and then spiked this year up over 1,000%. And why is that? Well, if we look at the news articles about this stock, you can see that they recently hit a massive copper deposit in Nunavut, Canada. And so that is why the stock jumped from 5 cents to 25 cents. Now, things like this are not really investable unless you have insider information, in which case it's actually illegal to invest upon that anyways, because it's really impossible to predict whether or not a junior mining company like this is actually going to hit pay dirt. And so people that buy these types of exploration mining stocks are basically gambling. They're taking out lottery tickets on the off chance that these companies hit something big, and in most cases they never do. So despite the fact that this is an impressive performance year to date so far, I don't think it's actually that useful in terms of taking some lessons learned and applying it to the future. So let's take a look at the next couple companies on the list. The number 2 best performing stock of the year so far is Eupraxia Pharmaceuticals Incorporated, and it's up 905% so far year to date. Now this is another company trading on the Canadian markets. Its shares are going for around $7.50 Canadian, but it is basically still a penny stock because its market cap is less than $200 million. And you can see that it's had a run up from less than $1 all the way to almost $9 before tapering off a bit, and it's settling in at $7.50 right now. Now, one thing that stands out to me about this as opposed to the last price chart we were looking at with the junior mining company is that it's not just a massive jump up from one point to another based on some type of news. It's rather a slow and steady increase over the last year or so. Now, this company is a biopharmaceutical company that's developing drugs, and for example, if we look at their pipeline, we can see the different types of drugs that they're developing. For example, something for knee pain, other inflammatory conditions, blah, blah, blah. Now, I don't know enough about biopharm to say whether or not this company is legit, but if we look at some of the news articles out there, we can see that they've been posting strong quarterly results, and also that some analysts or investment advisory firms like Raymond James are suggesting that this company is a strong buy. Now, I probably would not invest in a company like this just based off the information that we've seen. And in fact, as we look at the top 5 best performing stocks of the year so far, we can see a trend in that all of them are either mining stocks or pharmaceutical stocks. Number 1, number 3, and number 4 are all mining stocks, and number 2 and 5 are pharmaceutical stocks. For example, the Eureka Lithium Corp, which is up 900% year to date, is another junior miner that's looking for lithium, and I'm willing to bet that they've had some sort of major discovery that's led to the run up in prices. Yeah, you can see 4 days ago that Eureka identifies favorable lithium targets at the Raglan West project. Same thing with number 4, the Rosuro Mining Ltd company, which is another junior gold exploration company. So I'm not going to spend too much time focusing on these top 5 because I don't necessarily see these gains, which are definitely eye-watering, as something that's sustainable or even really repeatable for investors. But if we look at the next few, they are American companies that are traded on major exchanges. For example, number 6 is the Carvana company. Now this company has had a bit of a rough ride lately. You might have heard of the company because they're basically an online platform where you can buy cars without ever actually going to a dealership and seeing it in person, and then it gets delivered to your house. Now if you look at the stock chart for this company over the past 5 years, let's say, you can see that it really ran up at the peak of the pandemic boom when a lot of tech companies were soaring, and has since had a pretty spectacular fall from grace. It was trading at over $360 per share around mid-August 2021, and then traded as low as $4.40 per share just as of the beginning of this year. Now, if we look at the year-to-date chart, this is what we're seeing. It's gone up from less than $5 all the way to 40 US. So it has had a pretty spectacular run up, fall from grace, and now it's starting to actually pick things back up again. Now this company is definitely not a penny stock with a market cap of over $7 billion. And I do think it's interesting to see that this company is starting to recover. I know for a fact that some thought it would never be able to bounce back, and obviously it's still a very long way off from its all-time highs. But if you had invested in this company at the lows around $4.40, you would now be up 10x from your investment just earlier this year. And one of the reasons why I find this success story, at least in 2023, to be so interesting is that the trajectory of a company's stock price is not necessarily a predictor of what is going to happen in the future. Now, I'm definitely not saying that Carvana is a buy at this point. All we're doing here is taking a look out of interest. And to round out the top 10, here are the last 4 stocks on the list. American Coastal Insurance Company coming in at number 7, Applied Optoelectronics coming in at number 8, EdTech Holdings at number 9, and Canadian Gold Corp coming in at number 10. All of these companies have experienced over 500% growth in terms of the stock price year to date. Now this company, number 7, is interesting, American Coastal Insurance Company, because it's actually a spin-off from another company that recently went bankrupt called the United Property and Casualty Insurance Company. That company went under, and then it changed its name and restructured and came back onto the NASDAQ as ACIC, which is the company that we're seeing right here, which is up 647.2% year to date. Applied Optoelectronics is a provider of fiber optic and networking products, and the rise of this stock so far in 2023 has to do with the fact that they have increased their guidance for revenue targets because of the fact that semiconductors and the types of electronics that they produce are increasingly in demand worldwide. According to Yahoo Finance, there's also been a lot of insider buying of this stock, which is interesting and usually a bullish signal, because when insiders actually buy shares in their own company, it's usually because they're feeling confident in the company and its future potential prospects. And really quickly, the 9th company on the list is EdTech, which is a holding company, and the 10th on the list is another Canadian mining penny stock, Canadian Gold Corp, trading at 21 cents a share. And obviously they must have found something good, or investors are speculating that they might find some gold deposits somewhere. So those are the top 10 best performing stocks of 2023 so far. A trend clearly in here is that either junior mining companies or biopharmaceutical companies really do have a chance to 10x in a short period of time. However, it cannot be understated how much of a lottery ticket buying stocks like these are, because there are a ton of them trading on the TSX Venture or other penny stock exchanges, and most of them, the vast majority of them, will never see gains like this. And even those that do, in order to profit from it, you have to time it nearly perfectly, which is obviously something that's very hard to do. Anyways, I hope you found this video interesting and illuminating, and I'll see you in the next.